Welcome back to another video. In this video, I'm going to cover the top stocks that I'm watching for the first quarter of 2026. Just to put this out there, I am not a financial advisor and I recommend you always do your own research. So let's get into the stocks that I'm watching. The current ones that I'm watching are going to be Adobe, CRM or Salesforce, PayPal, Meta, The Trade Desk, ConocoPhillips, and Plug Power. The last three are a little more speculative and they kind of have if this happens kind of routes to them. So let's get into the first stock, Adobe. Adobe beat the Q4 earnings of 2025 by 11 cents. That puts them at an earning per share of 16.7 with a PE of 19.9920 with a 5-year average at 40.91. What we're looking at with Adobe is that 5-year, they're below that 5-year average because they were higher growth or considered higher growth. So their price was actually higher. That price per earnings typically tells you if it's going to be a value trade, if it's high growth, low growth. They kind of give you a little bit of insight to that. Some people use it, some people don't. I do like using it for where the actual price is at currently. I believe the price is actually low compared to their earnings, especially I do believe they should be trading closer to that 5-year mark. Their revenue growth year over year for 2025 was 10 to 11%. That's exactly what we're looking for in these stocks is a double digit growth in a solid value company. They do have a wide moat, but that moat is filling in by some of their competition in the creative cloud dominance. I do believe that they're going to continue leading the dominance in this market, and I do think that they're going to continue innovating with their AI integration and things along those lines. That's just going to keep pushing Adobe to the top. They have very strong leadership with a tenured CEO who wants to boost their AI integration, which is following the AI train, which is perfect. Cash flow of over $10 billion for 2025. They have way lower cash on hand due to investments and share buybacks. They bought a total of estimated 30.8 million shares in 2025. That's a company that is at least trying to tell us that they believe in themselves and they're putting on a strong future forecast by buying their own shares back. Their total debt is around 6.2 billion with their cash reserves being around 5.9 billion. I'm not too worried about their total debt to cash reserves. They definitely have been handling a influx of cash flow and it keeps growing year to year. So to be able to pay off that 6.2 billion, I would not be concerned with that at all. All right, let's talk about price points for Adobe. Adobe's buy-in for me is in between $330 and $315. If it falls below the green bar here, which is 33.81, I believe. So if it goes down below 333 and 81 cents, that is a primed buy-in place. I will be buying in myself. And you can see in previous months that we were in that zone in between that channel. If it goes down to 315 again, I plan on buying significantly more. I do have faith and I believe in this company, and they have the metrics and the market to be able to back my belief. So moving into the second stock, CRM Salesforce. They beat on earnings, so their earnings per share by 39 cents at $3.25. Their revenue growth was in that same range at 10 to 12%. And they released, and they've been pushing for Agentforce. That's expected to grow about 114% in early 2026. So we're kind of on board that train, hoping that AI is going to continue to grow. Their PE is 34.7 with a 5-year average of 176.4. Once again, this was a high growth stock. It was priced into the price point, so it was trading much higher than their earnings. It did backtrack a bit, and that's the dip we're trying to buy. They have a wide moat, which is increasing by AI use and high platform switching costs. It just is costly for most of them to start a platform, get into it, buy all the memberships and subscriptions and then switch. So they have a very strong leadership with their CEO, Mark Benahoff. I believe that's how you pronounce his name. My bad if it's not. And they have a operating cash flow of 13.5 billion, which is up from 12.9 billion the year prior. Their total debt is 8.4 to 11.1 billion, but they have cash reserves of 17.4 billion. With that kind of cash reserves and cash flow coming in, I expect CRM Salesforce to be able to still grow consistently for the next 5 to 10 years. They should not have many kind of problems. They can outpace competition very easily with that kind of cash flow, and that's exactly what I would anticipate them to do. So their buy point, I would buy anywhere below 25454. So you could see right here that green line right there is that 25454. So right now we're in a potential breakout style channel. If we end up breaking off to this high side, then you're looking at we are in new territory. We could be matching this other high over here, which is closer to that 285 mark. But there is going to be heavy resistance at that blue line. I do not anticipate us to actually cross above that blue line as of right now, which is why it is still in my to buy list and my watch list. I'm hoping to secure more short shares around that 254, 255, somewhere in there. If it drops below that, we're looking at it might go down to about 230. Just a couple months ago, you could buy right around that price point. That was fantastic. I loaded up on some shares back here. So that's exactly where I'm looking to buy CRM. PayPal. So PayPal's been around for a while now. Everybody knows about it, right? So the EPS on the last reportings beat by 14 cents. They had a revenue growth of 7.3% year over year. Their PE is at 11.6 with their 5-year average at 33.2, almost a third of their previous 5-year average. So their moat is moderate due to increased competition, especially from finance, fintech, and Apple Pay and Google Pay. Now they're constantly making partnerships, and they're on the last line here, they received a banking charter to be able to become a direct lender. That should boost revenues and lower costs. So that's why I'm in on PayPal. And their new leadership is focused around turnaround and reducing costs, hence the banking charter and becoming that direct lender. They have free cash flow of 6 to 7 billion, and they have debt of 11.2 billion. So now their debt's a little high, but once again, they're trying to tackle this. So they're reducing costs. If they can start paying down that debt, increasing their revenue, I think it's a win all around. I'm in for the ride on PayPal. PayPal is currently around 57.66. We're right at that resistance that if we break down below, that puts us back into that buy channel. That's exactly where I'm looking for. If we go lower on Monday, open lower, then I'm looking at buying PayPal hands down. If we end up moving down to this, it'd be about $52 to $53 range, or I'm sorry, 55.35. I'm definitely looking to increase my spending and how many shares that I purchase of PayPal. I believe that there is going to be upside potential, especially when they start reporting earnings and revenue on the direct lending. That's going to be fantastic news, lower the expense cost and increase that revenue. That's exactly what we're looking for in a moderate growth company that's been around for a while, that has great leadership. So we're going to move into Meta. Now, Meta has a little bit of a tricky EPS report. The last quarter that it reported, it missed by 5.64. It only reported $1.05. That was majorly due to a 15.9 billion tax charge that they weren't necessarily anticipating. Either way, they had to pay it. It brought down their earnings per share. It brought down their overall earnings for the year. Their revenue growth, however, was still 21% year over year increase. So that is fantastic for a company this large at this price to be able to still increase their revenue, not only double digits, but over 20%. That's exactly what we're looking for, especially with this AI boom and Mark Zuckerberg leading the charge. And everybody knows he's a visionary. He does like to take risks and everything. But if you're looking for a solid stock that has that kind of leadership still, that's amazing. And I view this as a strong buy. This is the one that I do not own yet, but I'm currently actively watching to see where I can make a buy in and a purchase at. So their PE is 28.8, which is actually above their 5-year of 24. That is absolutely fine. Once again, they got growth coming in, they got revenue growing. Under 30% PE, that's absolutely fine to me. I'm still a buy on. Large and wide moat. They have billions of active users. Nobody's going to be able to come in and just be like, yep, I'm going to compete with Meta. It's just not the way it works unless you come up with something completely insane and visionary that is just going to blow it out of the water. They are just in too many different things. So they have free cash flow of 10.6 billion, and that is due to a huge amount of capex spending last year into AI infrastructure. Their debt on the sheet is 29 billion and total estimate of actually 51 billion. But the difference in between that is actually due to a huge investments in nuclear power. I believe nuclear power is going to be the way of the future. I'm heavily researching it actively and trying to see where the best buys are. The problem with nuclear power is we're going to be talking about it now. It's going to kind of fade away, and then all of a sudden it's going to be a huge thing. And anybody who bought around now or in the near future when it dips because it kind of fades away from that news is going to do fantastic. The problem with nuclear power is when you start buying and you start building, it takes years to actually see any kind of output. So with that being said, I believe Meta Platforms is going in the correct direction to broaden their market, and I actually am full blown on the bandwagon for them. So I'm going to be purchasing some shares probably by the end of the month. So going into the chart here. So right now, Meta is looking at trading around $653.06. We're right above the bar of resistance. Once we test that bar of resistance, once again, I plan on purchasing some shares. The above resistance, I actually do think we're going to be breaking through that pretty soon. I think the Mag 7, Meta is a part of them. They are going to push through and they're going to go on another run. I believe about 5 of them are going to go on this run. I think the other 2 are going to kind of sit out. I'm pro Meta is going to be one of them. They just have a lot more going on, and they have one of the highest moats that there is. I don't think anybody's really going to be able to touch them. Now, if we break under this 653, we're looking at going down to these levels again. We're looking at the 612, 597, 582. So yes, we do have a significant downside if we meet that resistance and fall flat on our face. But if it drops back down to these rates, and that's where I'm bummed. I missed the train. I wish I would have been buying right back in here at those rates. So anything under 650, I'm a buy. Anything under, if we break below that resistance, I'm going to keep buying on the way down, and then I'll be buying all the way back up to that 650. Moving on to the next one. Now we start the speculative stocks. So this one has been beaten down and wrung out, and everybody had it in their portfolios, and it's been a massive sell-off. So I'm going with the Trade Desk. Their earnings per share beat by a penny for 45 cents. Their revenue growth is down from 20% to 20% from 27% the previous year. Their PE is 42.86, and their average 5-year is 226.8. Tell me it wasn't a high growth company. Everybody was on board they were the next thing, right? So, with that being said, I believe that with their cash flow, their customer retention, they are moving from a high growth company to a low to moderate growth, higher value. The reason I say that is because they are completely on their own in what they're doing currently. They are completely transparent on what is going on. They want it to be transparent. They are comparatively giving pricing for competitors themselves, all that kind of stuff. And that's exactly what I look into for a company being moderate growth and high value. And to me, that is high value. They value their own company enough to be able to compare like that. That's huge. So their leadership is strong and it's still founder led, which gives you a little bit more faith and strength into that leadership of the company. Their mode is competitive with speculation from Google and Amazon's. They were calling them the walled gardens right now. Essentially, Google and Amazon are doing their own thing. They're not letting in any kind of competition, especially from the trade desk. Things change every single day, let alone year. So their free cash flow is $670 million and growing. Their debt of $370 million and $1.4 billion in cash. This is what I am loving about this company. They have massive revenue and low cost of business. So their debt is nothing. They got tons of money on the sidelines just waiting for their next opportunity. So they have 95% retention, customer retention over the last 11 quarters, excuse me. And they have new products coming out. The Coke AI platform, I'm not sure how to pronounce it, but that's supposed to be a revolutionary product for them. We're going to see where that brings them, what revenues that brings them. Hopefully we can start seeing that in the early 2026 and get some reports out on that. So the trade desk, the chart, my buy-in price, we're at it. 37.29 is where we're currently sitting. I'm going to be buying anywhere from that 37 to 35.86. If we break below that 35.86, I'm a full-on buy the whole time. The reason being is our upwards resistance is $40.30, which I do believe we are going to be hitting no problem. So we have a built-in, I believe we have, or I'm going to have a built-in, pretty much, you can't say guaranteed, right? But I believe there's built-in upside. I like the company. I like what they do. They're expanding. They're growing. They're keeping their customers. That tells me that they care about it. And I only see some upside. Now, we're not at the 130, 120 where before it all came crashing down due to competition issues with Google and Amazon and all of them. But I think they have some upside left. So I'm in on Trade Desk. I do plan on buying more shares. The lower it goes, the more I'm going to buy. All right, so this one's speculative. ConocoPhillips. This is speculative in the Venezuelan oil situation currently ongoing. Venezuela has sour oil or thick. It's thick. It's for diesel and industrial and things along those lines. That's exactly what ConocoPhillips excels at. They are one of the leaders in that style of oil and refining it and giving it to those who need it. The United States, we need it, right? We got semis everywhere. We got diesel needs. We got fuel needs. So with that being said, ConocoPhillips has a good leg up in this situation as long as nothing actually happens with that oil and we're able to access it. So they had a 18-cent beat on earnings per share at the end of 2025 for $1.61. Their revenue growth is $9.21%. From the last quarter, it was 15.26. So they had a little bit of a surge at the end of the last year. Their PE is 13.8 with a 5-year of 15.1. I believe there's a little bit of built-in upside there. The PE is actually pretty attractive right now. Their moat is entry level but wide, and that's because of huge government advantages. They're already in. They already have the red tape cleared, all that kind of stuff that they needed to be able to sell in the United States and be able to produce and refine this oil. Their leadership is top heavy, it's very efficient at the top, but they claim that it's slow moving and disorganized when it flows into the middle leadership. Hopefully, they can get a handle on that and rein it in a little bit, but it is a very large company. So, their free cash flow in 2025 was 2.5 billion with a setup to improve due to the ongoing Venezuela deal. So they have $23.48 billion in debt. And I believe in the last news article I read, I haven't researched it to know 100%. They said that they were owed like $10 billion from Venezuela due to the issues over the past few years. And Trump just announced that they're going to get most of it back, right? So that's going to be huge if all of a sudden that's happening, because that will clean up, hopefully, some of that debt. And their cash reserves are only 7.5 billion. I don't really like that ratio by any means. I wish that they could increase those cash reserves and pay down that debt quite heavily. But we'll see what happens in the ongoing months. Once again, it's a watch. I did buy a little bit already, but we're gonna keep watching it and see what happens. So my buy-in point would be below 97.51. That's the current pricing, but we're right at that bar of resistance. Most of these came down to test resistance. That's another reason why I'm talking about them today. If they open up and drop down further, they're a buy for me. So I'm looking at 97.51. If it drops down below 94.03, then I'm going to start significantly buying. There's another bar of resistance that we were just at a few weeks ago that was a great buying opportunity, especially when we broke down here. I got a little closer to that 91, 92. That would have been fantastic. Of course, back here would have been a great buying opportunity. I was not paying attention to ConocoPhillips at that time, sadly. We always miss chances. Hopefully the next one's going to be just as great, right? So, last stock on the list is highly speculative, the most speculative one on this list, and that's going to be Plug Power. Everybody went through this phase when clean energy, Plug Power was it, right? They were going to be the future of hydrogen, and then it kind of wavered a little bit, and then it came crashing back down, and everybody was left trying to pull their pants back up, right? So, with that being said, I do see upside potential for hydrogen power. So let's get into Plug Power. They missed by 19 cents. They're negative 31 cents on their EPS. Their revenue growth was still 10% year over year. That's still great growth, and I actually see it going higher because they're doing a lot more with their electrolyzer, and they're getting a bunch more contracts and things along those lines. Their PE has not been profitable. They're aiming to be net profitable in 2027. Their moat is narrow with high competition, but they are concentrated on the electrolyzer, the storage, the shipping, the housing, the use of. They're wanting to be a turnkey operation. You get a hold of them and they set you all up, and then they hold the contract to continue giving you electrolyzer. That's the idea behind their business. So they have new leadership and it's focused on profitability. I think if they would have been able to show profitability, they never would have got lost in the race where everybody kind of wavered on it and started selling. Their cash flow is significantly negative due to investments in growth, and their debt is $991 million. They don't have any positive cash flow to be able to report it. I'm hoping that they can start paying down those debts and increasing their cash flow to hopefully be seeing some profitability in the upcoming year, 2 years, 3 years. My belief in the hydrogen market is that it's going to continue growing. There's another reason behind it, but it's primarily used for industrial right now. and they're looking at trying to get it used for transportation, power, all these other things that, you know, the electric car, everybody was saying there was no infrastructure for it, and then bam, all of a sudden there was electric cars everywhere, charging stations everywhere. You know, things like that happen, and sometimes it happens quicker than what we thought. I don't want to miss the train. But the one thing that's happening with the hydrogen is all of these nuclear power facilities that they're looking to build. One of the byproducts of it is pure hydrogen. So if they can utilize this hydrogen to be able to boost and not let it go to waste, but actually have a use for it, and I'm just hoping Plug Power can capitalize on that. I'm sure there's other companies that I'll end up doing some research into that might be able to capitalize better, and I will definitely let you guys know. But as of now, I am a fan of Plug Power, not its books, numbers, nothing like that. But I do believe in the thought of the hydrogen power being a benefit to the world. All right, so Plug Power is a buy anywhere under 218. That's the resistance line that we're sitting at right now. I would love to start purchasing closer to that 182, which is this purple line down here. Obviously, if we break down through there, we'll be in a lower channel that I would love to continue purchasing. That's actually my price point right now. I do not actually want to buy at 218 or higher, which it keeps bouncing around. Obviously, just a few months ago, it was closer to $4, right? So it is on a downhill trend right now. But with this last little spike up and us playing with the resistance again, I'm hoping that we're actually going to have that spike up. So I'm not going to be a buyer again until we break down below that resistance, which is 218. And then I'm hoping that I can be a significant buyer at that 182, if not lower. You can already see back here in the chart, you know, just months ago, 6-7 months ago, we were actually under $1. So there definitely is upside potential with this stock still, and there is definitely downside potential, especially depending on what's going on with the current oil in Venezuela. If everything becomes cheaper, that might actually reduce the cost of creating the electrolyzer, which would be a big thing for Plug Power to start recording some profit. But it is a shot kind of almost in the dark. So with that being said, once again, make sure you're doing your own research before you put your money anywhere just because some guy on YouTube told you to. And these are the stocks that I plan on watching heavily and buying in, and I will keep you guys updated as to where they go and if I swap any of them out. If you got any kind of info from this video, please like and subscribe, and I will see you in the next one.